If you invested just $50 a week, you could make $339,000. What's going on, everyone? In today's video, I'll be showing you the best investment that anyone can make. It's considered to be the most consistent and reliable investment in the world. It can quite literally make you hundreds of thousands of dollars. It requires no prior knowledge about the stock market and needs very little effort to maintain. And all you need to do is just add a very small amount consistently to your portfolio. No matter how little knowledge you have about the stock market, it doesn't matter. Some of the biggest investors like Warren Buffett, who have a net worth of $107 billion, consider this to be the most reliable, consistent, and profitable investment in the world, and one that's the most accessible to everyone. So in this video, I'll be giving you an exact step-by-step process on how to participate in this investment, some tips and tricks along the way to help maximize your profits, and an exact explanation of why this investment is so profitable and so powerful. Remember, if you found the content helpful, make sure to help me out by liking this video and subscribing to the channel. The investment that I'm of course talking about is the S&P 500. Just to give you a bit of context on what this is, it's essentially the top 500 companies in America. Think brands like Facebook, Coca-Cola, Amazon, Google, all these well-branded, well-recognized companies that have stood the test of time and really they're not going anywhere. Essentially, when you invest in the S&P 500, your money will be spread out amongst all these different businesses. You might have 2% in Google, 5% in Tesla, 3% in Amazon. So essentially, you're just participating in the market. You don't have to worry about what stocks to buy or do any research on individual businesses because your money is automatically spread out amongst the biggest companies in the world. And this makes it so effective because it removes a lot of the stress that can come with investing, or the type of stress that people may think is related to being an investor, like having to spend hours researching businesses, being the best at picking out individual companies, having to have 3 computer monitors set up, staying up all night so you don't miss any trades or lose any money because you couldn't sell your stocks in time. None of that is required, and you don't need any upfront effort or prior knowledge. When it comes to the stock market, you're not going to have to set aside hours of your weekend looking at the stock market. All you have to do is just consistently put your money into the S&P 500 in order to reap the rewards that it can give you. Because your money is spread out amongst so many businesses, if say Google or Facebook was doing poorly, Amazon and Tesla will be rising in value, and then overall the trend will balance itself out and you'll get a nice consistent return. This avoids some of the problems that come with selecting individual businesses. All your money was in Amazon and it's doing poorly, then you'll be losing money by default because all your money is just in one company. But if it's spread out amongst all these businesses, it greatly increases your chances of actually making a profit and consistently getting a return from your investments. The clip at the beginning of the video based upon an initial investment of $1,000 and then adding $200 a month, so $50 a week, but it's over the course of 30 years. Yes, 30 years, but before you click off this video, it's not designed to make you rich overnight. Think of this investment like your nest egg, like your retirement fund. It's something long-term that won't make you rich overnight, because where would your money be otherwise? It would just be sitting in a bank, or you'd be spending it. If it's in a bank, you'll just get maybe 0.5 to 1% interest, and if you think that inflation is between 1 and 3%, you would quite literally be losing money if it's just sitting in a savings account. But with the S&P 500, you get an average return of 10%. Now this is in the very long term. There are periods where the S&P 500 can do nothing for say 10 years, just going up 1 or 3%, but it has withstood a lot of financial strife like the 2008 housing crisis, coronavirus, where the S&P 500 dropped over 35%, but it has withstood all of these problems, and in the very long run, it can average you a return of 10%. This year alone, it's gone up 38% already, but of course, this isn't a normal return that you should be expecting. 10% is the average. It's been around since the 1950s. It stood the test of time. It's one of the strongest investments that you can get, and if you're just looking at it in terms of a retirement fund, it's great. With a bank, you're going to be losing money if your savings are in there. You're never going to make $300,000 plus from your savings account, so this is how you should look at this investment. It's not going to be fast, it's not going to make you a millionaire very quickly, but it will guaranteed make you hundreds of thousands of dollars in the long run if you add to it consistently and don't take any of your investment out. And the amount of money that you can make can well exceed $300,000 if we stick with that initial investment of $1,000, but instead of $50 a week, we put in $100 a week, then you would get $662,000 if you did this for 30 years. And I know it's a long time, but that return is amazing. You can't get that with any bank whatsoever. And for the lack of time that you need and effort and knowledge to do this, it's pretty amazing. So I would strongly encourage anyone to look into this. I'll leave a link to the compound interest calculator in the description, and you can start working out how much money you could make from this. In terms of guaranteed money, this is the best that you can get. While it's slow, it's consistent, it's reliable, and I don't know any other investment that can guarantee to make you hundreds of thousands of dollars just for putting in small lump sums like $50 to $100 a week. If you did this for more than 30 years, you could quite literally guarantee yourself to become a millionaire just from putting in that $50 to $100 benchmark. If we did this for 40 or 50 years, you can see you can easily creep into that $1 million range. You could be working a minimum wage job for 40 to 50 years and still be a millionaire. And now that is incredible. That's all well and good, but how do you actually invest in the S&P 500? So what you'll need is a brokerage platform. If you're in America, you could use Robinhood. If you're in Australia or New Zealand, there's Stake. And then in the United Kingdom, there's Free Trade. There's obviously other brokers in these countries, but these are some of the most popular ones. All of the brokerage platforms are pretty much laid out the same. So I'll be giving you an exact walkthrough using the brokerage platform Hatch because I'm currently in New Zealand, so that's what I'm using. But you can follow along no matter what broker you're using. They're all pretty much set up the same, and the tutorial I'll give you now is applicable to any brokerage platform that you might be using. When you're setting up your brokerage platform, you'll just need to provide a few things like your email address, phone number, and then proof of address, either in the form of a utilities bill or bank statement. All of this will take about 2 days to get processed, and then you'll be nice and ready with your very own brokerage platform. So jumping onto Hatch, I'll show you what the whole process would look like when it comes to actually buying into the S&P 500. So you can't buy directly into the S&P 500, you need to buy into an ETF that tracks it. Essentially what an ETF is just an investment vehicle that has a particular goal. So there's ones that might track a certain commodity like gold, or a certain sector like healthcare, or one that will track the S&P 500. So its goal will just be to mirror the performance of the S&P 500, buying into all the same stocks. And if you look at the two charts side by side, you can see that their performance is identical. Some of the best ETF providers are Vanguard, iShares, or BlackRock. So for this video, I'm going to be using Vanguard. Now, it's not particularly important on which one you use. These are just the main three that you can get. Jumping onto Hatch, if you search in Vanguard S&P 500, it'll just pop up here. So scrolling down in the bottom left, we can see there's the ETF that will be tracking the S&P 500. Click on it, and then it'll give you a few buying options for it. So for the sake of this video, I'll be investing roughly $200 US into the S&P 500. Gives you a brief outline of how it's been going, say 1 day, 1 month, 6 months, 5 years, and so on. You can see the overall performance of how it's been going over all those time points. So I'll just click on buy, and then I'll go to market buy order, which is just buying the stock at the set price. Here I'll put in my 215 USD, go review market buy order, and then I'll just scroll down and hit place order. Keep in mind, depending on the brokerage platform that you're using, there may be a brokerage fee, so a fee for buying and selling shares, and this can vary between different brokers. So for Hatch, it's $3 US, which equates to roughly $4.20 New Zealand. And then if you're with Robinhood or Stake, one of these brokers, there's no fee for buying or selling shares. So keep that in mind, because if you're investing, say $50 every week, that would be, $3 US every week lost on the brokerage fee, and 3 times 52 is over $150 just on brokerage fees. And if you think about that over the course of 30 years, that can add up to thousands of dollars. So just keep in mind, if you have a brokerage fee for your platform, you just want to be investing, say, a lump sum every 6 to 12 months. So just add up all that money that you would have invested, put it in a separate account, and then every 6 to 12 months, put it in. So then you're not paying all those brokerage fees the whole time you're investing. Here's some shares that I've purchased earlier. As you can see, it's got $148 USD invested. So this is what it will look like once you've purchased your shares in the S&P 500. So thanks for watching, guys. Remember, if you found this video helpful, make sure to help me out by liking this video and subscribing to the channel. If If you want to learn more about finance and investing, make sure to click this video on screen and you can learn about the top 7 things that I wish I knew when I first started on my investing journey. It would have saved me a ton of money and a ton of stress, so make sure you check that video out so you can save yourself some of the hassle that I went through when I first started with investing.